Let's be honest, we all know the rules. We all know about the daily loss limit, and we know exactly why it's there. And yet, it's one of the single biggest reasons traders fail prop firm challenges. Not over weeks or months, but in one single catastrophic trading day. So what is actually going on inside our heads when that happens? Let's break it down.
This right here, this is the question we're going to answer. If you've ever set a hard stop for the day, a line in the sand, only to find yourself blowing right past it in the heat of the moment, you know exactly what I'm talking about. And the answer, as you're about to see, has almost nothing to do with your trading knowledge and everything to do with psychology.
Okay, so let's start at the beginning. Section 1, the perfect plan. This is the fantasy, right? This is how every single trading day is supposed to begin. Not with chaos, but with total clarity. Before the market even opens, you are at your best. You're logical, you're disciplined, you've got a plan.
And yeah, that plan, it probably looks a little something like this. It's clean, it's simple. Maybe you decide, okay, 2 trades maximum today. The risk for each one is perfectly defined. And there it is, the most important rule of all, that clear daily loss limit. That is the line you swear to yourself you will not cross. This is you, in your logical, rational mind, before the emotions of the market kick in.
And then, the market opens. Section 2, the first loss. This is where your perfect, beautiful plan makes first contact with reality. And sooner or later, that first test arrives. It's not some disaster, it's just a trade that doesn't go your way. It's supposed to be a totally normal part of trading.
So there it is, your first trade hits its stop loss. You knew this would happen eventually. Losses are just the cost of doing business in this game. Right now, you're only down a little bit for the day. No big deal, right? The plan is still working.
And this is the fork in the road. This is the exact moment where it all goes right or it all goes horribly wrong. The correct action, the one your plan calls for, is simple. You stop. You take the small planned loss and you walk away to fight another day. But then there's the reaction. That little voice in your head, that primal urge to get it back, starts pulling you in a very different direction. And instead of shutting down the computer, your hand starts creeping back towards the mouse.
And once you listen to that little voice, you walk straight into Section 3, the emotional spiral. This is pretty much the point of no return. That one single choice to ignore your plan and just react sets off a predictable, dangerous, and often disastrous chain reaction.
And we have to be brutally honest with ourselves about this next trade you're about to take. It's not coming from the logical part of your brain that spotted a perfect A+ setup. No way. It's an impulse. It's driven entirely by that emotional lizard brain that's just screaming, you have to make that money back right now. And then, boom, it happens again. The second trade loses. Okay, now the pressure isn't so minor anymore. Now it's real. The hole you've dug is deeper, and that feeling of urgency starts getting a whole lot louder.
You know, at this point, your decision-making quality absolutely plummets. You're not analyzing the market anymore. You're not following your rules. You're just revenge trading. You're just chasing the losses with trades that get more and more desperate and, frankly, have a lower and lower chance of working out.
And here it is, the inevitable outcome. You blow right past that daily loss limit that you so carefully and logically set just a few hours ago. It wasn't one bad decision that did this. It was a rapid-fire sequence of them, each one fueled by the loss that came right before it.
So let's zoom out. Section 4, behavior overrides logic. To stop this from ever happening again, we have to understand why it happens. This isn't a failure of intelligence, it's a failure of emotional control. A moment where our basic, primal instincts hijack our logical thinking brain.
We can actually put a name to this whole mess. The loss to escalation loop. And it is a terrifyingly predictable pattern. It starts with one single, totally acceptable loss. That loss triggers an emotional need to get back to even, which leads to unplanned trades, which create more losses, which escalates the whole situation until you've completely lost control.
I mean, when you break it down into steps like this, it's so obvious, isn't it? You can see the dominoes fall, one after another. It all starts with something completely normal, a loss. But it's the emotional reaction, not the loss itself, that's the real problem. That's what leads to the unplanned trade. And from there, it just snowballs until logic has completely left the building.
And here's why this is so critically important. This one bad day, this one daily failure, is the fast track to total account failure. Most traders who hit their max drawdown and blow up their accounts do it because they couldn't stop the bleeding on one single terrible day. So if we know our willpower and our discipline are probably going to fail us when we're under pressure, what's the alternative? Well, this is where we see the huge difference between how an amateur struggles and how a professional operates. It's not about trying harder, it's about building a better system.
This slide really says it all. The amateur is relying on willpower, which we've just seen is like a muscle that gets tired and breaks. They react emotionally, they break their own rules, and they put their whole account at risk. The professional? They rely on systems. They take the decision out of their own hands. They follow the rules because the system forces them to. They protect their account and they make sure they can survive.
So how does that work? It's simple, really. A professional system is designed to remove you, the flawed human, at the most critical moment. When that loss limit gets hit, the platform physically stops you from trading. It's automated. The ability to make that next, terrible, emotional decision is taken away from you completely.
This quote right here, this is the entire professional mindset in a nutshell. Amateurs are obsessed with recovering the loss from one bad day. Professionals are obsessed with surviving to trade for the next 10 years. The #1 goal is always, always to protect your capital, because you can't recover anything if you're not in the game anymore.
So look, if you take just one thing away from this whole explainer, please let it be this. Failing your prop firm challenge because you broke the daily loss limit, that is not a knowledge problem. You already know the rule. It is a behavioral problem. It's an inability to follow your own rule when your emotions are screaming at you to do the exact opposite. And that leaves all of us with a really important question to ask ourselves. Knowing that your willpower is probably going to fail you under pressure, how are you going to build a system to enforce your own rules? How are you going to protect yourself from yourself?
Finding an answer to that question is the key, because the benefits of solving this one problem are absolutely huge. I mean, we're talking about fewer reset fees, avoiding those gut-wrenching account blowups, and finally, building the kind of long-term consistency that every successful trader has.
Now, for those of you who are really serious about putting a system in place, the source for this explainer mentions a tool designed for this exact problem. It's called Prop Trader Pro, and it basically automates your rules for you. If you want to check that out, have a look at the link in the description. But ultimately, whether you use a tool like that or build your own system, the goal is exactly the same. Protect your capital so you